If you clicked on this video, you probably want to learn about the easiest and best trading strategy. This strategy can be used and implemented in many trading styles, can be used by new traders, intermediate traders, and pro traders. I'm gonna get straight into it. The first thing I want to see is an obvious drawn liquidity. Drawn liquidity can be multiple things. It can be stacked highs, or equal highs. It can be lrlr, which is trendline liquidity, generated slow grinding liquidity. It can also be data high or low, which is an abnormal spike in price, given a red or orange folder news. If you want to see the forecast for red and orange folder news, go to forexfactory.com, go to the filter, select red and orange, select USD and apply filter. Now you can see the forecast for the upcoming news. Now we've established our drawn liquidity and where the market is going, I want to look for something called a lower time frame entry. Now I like to wait for a 1 to 5 minute entry. I would not go above 5 minutes because at that point I use the time frames above for drawn liquidity. So 15, hourly, 4 hour. I like to use the 1, 2, 3, 4 and 5 minute for our entry. The entry is a relatively simple pattern that looks something like this. Okay, and the actual trigger for the trade would be a closure above the fair value gap that gets created on the move down before going up. So I'm going to go on the chart and show you an example of all of these combined. Okay, so I'm going to play price and see if we can get a rejection from a high time frame gap and a sweep. Okay, so we have a rejection from this 15-minute fair value gap, and we've also swept out this low here using this as a soup. From here, I want to see a lower time frame entry, which is a fair value gap to get closed above to the upside for a long target these stacked highs here. There's nothing on the 1 minute. We're going to go to the 30-second. Here we have a 30-second fair value gap. Now I want to see a strong closure above this, and we can also close above this previous candle's high to form a change in state of delivery, like so. There's our entry targeting these highs here. Stop loss at the wicks. TP above. We're going to go break even at the most recent swing high. There's break even, risk-free trade, and then want to see price go to the upside to take out this high. Perfect. So to recap that, NQ manipulated at 9:30 into the 15-minute fair value gap, swept out this liquidity, V-shaped recovery, a visual V-shape was left, and we got a closure above this inversion gap, and we had obvious stacked highs, lrlr above, clearly generated liquidity. This also taps into the AMD model, the power of 3, the accumulation, manipulation, distribution. Also works like this: accumulation, manipulation, distribution. So when price consolidates, manipulates one direction to stop traders out, and then distributes the opposite way. Okay, so for this second example, we're going to be looking for a short. We have this 5-minute fair value gap that we want to see price tap into to get used as a rejection. Tapped into the gap, formed a fair value gap to the downside. Now we want to see this gap get destroyed in a few candles, like so. That's a V-shaped recovery to the downside. There's our entry targeting this low hanging fruit. Kind of works like the trade before in the sense that we accumulated, manipulated in one direction, and now we're probably going to get distribution to the downside. Looks something like this. So that's our short entry. Stops at the high. You see on the 5-minute time frame, we respected that 5-minute gap, and now we're going to go lower, potentially target this low hanging fruit. Perfect. Okay, for this next example, we have another long. Seeing this hourly gap get hit, that's our high time frame rejection. We also have the sweep from here, and above we have this very obvious generated liquidity above, right? We draw an imaginary line, the wicks respect it. There's a lot of orders resting here, meaning price is probably going to go to take out this liquidity. We're near 9:30 open, so I want to see price have an aggressive move to the downside to manipulate lower, to resweep the lows, and then see a textbook inversion to the upside. So price is doing what? Consolidating. We want to see this, and then we want to see this. Okay, with the inversion being here. So there we go. we've created two fair value gaps that align with each other. And now from here, because we're inside the hourly gap to the left, that's a high time frame rejection. I want to see a strong closure above this to then go break even at here. There's our entry, because we had a closure above these two gaps. Stop loss at the low, TP at the high. Because we're away from the start of the LRLR, we can potentially just go here and then start trimming our contracts here. Break even at the high. There's break even. Trim majority of our position there. And now we trail and we leave a runner to the high of this LRLR because I know this is going to get ran out due to how obvious it is. Like so. Okay, so this next example is going to be a trade that I've taken. We've got the execution here. We have a closure above these two fair value gaps. We're delivering off of a sweep and a fair value gap and also a key level in the market. I'm planning to go break even at the most recent swing high to take risk off the trade. And we have stacked highs above, generate liquidity too. And remember, when you see this V-shaped recovery, it's a byproduct of the market going up, right? The market isn't just going up because we got an inversion gap. It's purely just running through that gap because it wants to go higher to fill more orders. This strategy works so good at 9:30 because that's where most of the volume comes in. So it's going to be a really aggressive move to the downside, followed by very good price action to the upside. That's going to be it for today's video. If you found this video helpful, I'd really appreciate it if you could drop a like, comment and subscribe. This is quite a broad explanation of this strategy, so if you want more in depth learning about EQ, OTE, standard deviation, etc., then drop a comment below and I will do that. Anyways, hope you enjoyed and I'll see you in the next video. Goodbye.